Well, here we go. We're making a video today talking about bad news. Sorry, my hair is absolutely. I've just literally got inside and it's absolutely pouring it down. It's like winter's turned up in this last week in the UK. It's been awful, hasn't it? Just been absolutely soaked outside. We're going to talk. We're going to talk about the bad news at the moment. We've had 2 weeks of pretty decent news in the stock market. Obviously, the market's rallied. Earnings have been pretty strong from the companies that have reported earnings in the last 2 weeks, and it's been very good recently in the stock market. Personally for me, my account's been doing quite well, but today wasn't a good day. Today was a bit of a reality check of there was a couple of slaps in the face today. So as always, on the YouTube channel, we talk about when things are good. Obviously, we talked about HIM's earnings and how good that was. We talked about DraftKings on Friday, and today we're going to talk about some stocks that brought out bad news today, and some stocks that I own that brought bad news out. It's a channel that is not just talking about the positives and hyping things up. We talk about the good, and we talk about the bad, and we talk about the ugly. And today was definitely probably not even the bad part. I'd say it's the ugly part. So we're going to talk about some stocks that are not doing that well at the moment. So we've got 3 stocks. One of them actually is doing okay. The other 2 are not doing okay. So we'll get onto these. So the first one, S4C Capital. So obviously this is a stock that I'm going to refresh this because I've not refreshed it since lunchtime. So I'm just going to refresh it here. 12% down. So it ended up being down 12% today, which wasn't too bad. I would actually consider today the stock maybe could have been down a little bit more today. Obviously the stock is having a drop today. I mean, we've got used to this having a drop. It's been an awful year for S4C Capital. And obviously, as we know, they're a marketing company, and we know whatever marketing company you look at, it's been a terrible year for marketing. They've all been hurt. The problem with S4 Capital is that they've been hurt, but the guidance at the start of the year was so strong that they've had to bring it down a lot so far this year. And the profitability point of view, some other companies have been able to hold their profitability levels a little bit more. S4 Capital haven't. There's been a bit of stuff that hasn't helped them, like overhiring, which has caused a bit of issue in S4 Capital. And it's been a painful year, unfortunately. I've had some stocks that have done okay this year in 2023, but this has kind of carried on the awful 2022 that we've had, which hasn't been good to see S4 Capital do that. Now, obviously, we had Martin Terrell on the channel around about 2 months ago. And obviously, listening to him, one of the big things that he wanted to see is the improvement in the profitability. But unfortunately, when you look at the latest trading update, it didn't have that. The other thing as well is that we knew it was going to be a bad update in Q3. The problem is when you look at the recent Q3 update, it was probably worse than what you were expecting. Like we weren't expecting a major improvement. We were just hoping things were staying bad, but not getting any worse. And unfortunately, the update today was suggesting that things are getting a little bit worse. And I don't know if a little bit of that is that they've just forecast so high at the start of the year and they're trying to bring them back down to where realistically they are. But unfortunately, it's come a story where we've seen profit warnings really in the updates, and that's once again what we've seen. I think that's 3 this year. If you have a look here, I mean, the revenue was down, which is obviously not good to see. If you look at the guidance, they said that for full year like-for-like net revenue expected to be below prior year, which is definitely not what we want to see. We want to at least see them hold on to what they did gain. With operational EBITDA now to be a range of 10 to 11%, which obviously once again a little bit of a downgrade there. And once again, what we heard Martin Terrell say when he came on the YouTube channel 3 months ago, it's still not delivering his target to make sure profitability holds up okay. So I was disappointed with this quarter. I knew it wasn't going to be, I didn't have crazy expectations. I just didn't expect it to get worse, and that's what happened. So S4 Capital at the moment, unfortunately, I've got to say, is in the pile of that I can't buy. I can't buy S4 Capital until I see fundamental improvements inside the company, because at the moment the financials are just not improving enough for me to justify buying it. So yeah, definitely disappointed with that one at the moment, and I'll at least give it until marketing does start showing signs of recovery, especially in other businesses, and then I'll probably judge it a lot better when that happens. But yeah, obviously not good from S4 Capital. Looking into Disney. Disney having a fantastic day today. Disney stock is up 7% today, back into the $90 range. And I've got to say, I thought the earnings were actually okay. Revenue was a slight miss, 170 million on 21 billion. That's not that big of an issue. The big thing was EPS came in with a nice beat. That was a beat by over 10%, which was very good. And I was looking through the numbers. The numbers were actually very good. I mean, you look at direct to consumer, which is Disney Plus, growing once again. Subscriber growth, good. Not as good as Netflix, but improvement from last quarter, which is what we want to see. We want to see the improvements there, and that happened. Obviously, the big thing is the linear network once again was showing signs of dragging down the earnings, but we are expecting that to happen, so not much of a major issue. Obviously, parks were still okay. So I mean, overall, like the Disney Plus numbers were very good. Park numbers are holding up. We knew the linear network was going to be weak, and they were weak once again. But apart from that, the numbers in here were actually very good, moving into the right direction. They did say that a lot of that was down to the content they put out, and I did look at the content, and I did mention it here, but I can't find it. Maybe I can find it very quickly while I'm talking to you. But I was looking at the content that they have brought out, and I thought it's there. So yeah, they brought out Elemental, which seems very popular. Little Mermaid. I think when we talked about Disney before, I think I put a video out saying, Disney's not too bad of an opportunity right now. When I looked into it, and I said, Elemental, I think was in the top 10, I think it was at the time in the box office. Little Mermaid, you've got Guardians of the Galaxy Volume 3 and Ahsoka that's come out. I've not heard of that though, the Korean original series. I've not heard of that moving. I've not heard of that one. But obviously there were some big releases, and that's what we said, Disney have to get back to bringing out good content, and from what I've seen, Elemental was well received. I'm not sure on Little Mermaid. I know there's a bit of controversy around it, but I've not seen it. But it must have done well in the box office. Guardians of the Galaxy, personally for me, was my movie of the year. This year? Is it this year it came out? It must have been this year. That was absolutely fantastic. So we need to see them keep bringing out the content, and hopefully we'll see the recovery. And I think that was a good step forward for Disney anyway. So yeah, well done for any Disney shareholders that may be picking up in that $80 range where it wasn't too long ago there. Yeah, $84, even into the 83s. I think it might have even gone lower than that actually. 81, yeah, we even got the 70s in the start of October. So yeah, good report there from Disney, moving in the right direction. The last one, which is Topgolf. Topgolf today, not having a good day for Topgolf. If we just refresh it here, I don't know what it's down. It's down 14% today. The numbers in Topgolf were disappointing. The frustrating thing I've got to say about Topgolf, and I could say the same about S4C Capital, is that realistically, like, this company was doing really well in like 2021, even in 2022 it was doing really well, and it was a bit frustrating that it didn't reflect it on the share price. It kept going down. The only frustrating thing now is that the numbers are a little bit disappointing, and now it's getting punished on the share price, which has been a bit frustrating with Topgolf. But yeah, the numbers were disappointing. I can see why it's getting punished a bit on the share price today, and for me personally, I would like to see the numbers improve a little bit before I do buy on it. If you do have a look here, the earnings weren't actually bad. If you look at the earnings, the EPS was a beat by 0.09. Revenue, 5% growth, a little bit of a miss, 10 million miss, but 10 million on 1 billion, what is 1%? So it's not a major miss. The outlook is what killed it. So if you look here, the net revenues were to come into a range of 4.2 versus the consensus of 4.4. So obviously a bit of a downgrade there on the consensus. This is the big part, non-GAAP earnings. So the earnings on a non-GAAP basis was 0.39 to 0.43 versus the 0.61. When you are downgrading your EPS by that much, you're going to get killed on the share price. So that's why it's down today. The earnings from a point of view, what I can see, there's a combination of the reason on the downgrade. So we saw last time the Topgolf business was seeing a little bit of weakness, especially in the corporate market. Seems like there's been a bit of a slowdown once again in the Topgolf business. Clearly, inflation and everything like that is hitting people's pockets now, where they're going, oh, that Topgolf, we go do maybe once a month. Let's not do it this month because, we just got to protect our money a little bit. So I think there's a little bit of a slowdown from that point of view. The other big slowdown is it seems like the debt side of it is hurting them, and that was always my concern around Topgolf. Now, previously when I was buying Topgolf, it was in a very low interest environment. Obviously, we know the interest environment is a lot higher, and obviously when you look at Topgolf, they do sit on 1.6 billion of debt compared to a 2.4 billion market cap. So unfortunately, the debt is a little high on this business, and obviously in that higher interest rate environment, that's obviously from an EBITDA point of view, you're not earning. Sorry, before you take out the debt, it's not actually looking too bad, but because of this higher interest rate environment, it seems to be hitting the profitability as having to pay high debt repayments. So yeah, a little bit from, and I've got to say, like, as well, I was disappointed the other day because management then made another acquisition, and I was like, don't be making acquisitions right now. Like, this is where, the big thing is that the debt needs to be sorted, and I was a little bit like looking at management team going, I think this is a little bit disappointing from management team that they've not sorted this situation out and managed the situation a little bit better. So yeah, from a Topgolf point of view, I think it'll be okay. I think Topgolf will be absolutely fine in the longer term, but I think management team a little bit mismanaged on that balance sheet a little bit, and from that point of view, I want to make sure that they have a ramp up in that profitability and sort that balance sheet out a little bit before I do go buy some more shares. So once again, that's kind of in the pile of like, I've got to see an improvement a little bit before I do commit to buying some more shares in Topgolf. To be honest with you, at the moment, so that is 3 stocks at the moment that are making some moves today. Obviously, Disney, good move there, and I was pretty happy with those earnings. S4C Capital and Topgolf, a little bit disappointed with their numbers today. More to be with S4C Capital. I thought those were the more disappointing one, but thought I'd cover those 3 stocks at the moment anyway. So I hope you enjoyed the video. If you could hit the like button if you're around here, subscribe, and I'll see you in a bit.